earnings. Peter Cardillo, chief market economist at Rockwell Global Capital, is back here on our Xchange to walk us through what happened today. Any big news out of this sell-off?
You know, I think, look, there's no question that Greece was on the mind of investors, and there's no question that the new regulations that Shanghai Exchange is looking to impose also
in China,
was
some new banking regulations.
was also a factor. But I think the real problem here is simple, is that the market is at high levels, and that this earnings season, even though many corporations have so far beat or at least came in with inline expectations, the bottom line is that revenues and forecasting is a little bit on the sour side. And so I think this is the real reason why investors today chose to follow the path of the European market slower. And I think the market is ripe for a correction that could take us down between 8 to 10% over the next several weeks.
Is that driven by fundamentals, like you're saying, earnings news in Greece, or simply technical because of the general rise in the Dow?
I think it's a combination of both. Earnings, which are fundamentals, and of course technical. Remember, the market for the past several weeks the indices have been knocking on the higher end of the trading range, but yet we're stuck. There seems to be resistance there. So when that happens, that usually means two things can happen. Either you break out, which we haven't, or you reverse course. And I think a correction, let's call it a pullback, maybe, would be healthy.
Yeah, people taking some profits.
Yeah, would be healthy.
Greece owes $1 billion by the end of this month to the IMF, $7 billion by this summer. If Greece decides to default or is forced into defaulting, when you look at the U.S. equities, what type of exposure are we looking at? Yesterday, we were talking about possible, not so much exposure to Greece, but exposure to European banks that could get hurt.
Yeah, but not that great. A lot of the banks have reduced their exposure. And to be quite frank with you, if Greece can't pay its bills and has to default, or even has to exit the euro system, the single currency, I don't think that it's going to make much of a big impact in terms of growth here in the States, and certainly I don't think it'll impact Europe as well. It'll have a psychological impact, there's no question about it. Will the headlines look ugly? Absolutely. What will it mean for Greece? Well, it would mean hard times for Greece.
Tepid inflation, up 0.2%. Far off the Fed's 2% target. But there was some news that, there's always the speculation about interest rates, and that this might give the Fed some reason to think about raising interest rates.
No, I don't think so. Not now. I mean, interest rates are going up this year, but I believe that they'll probably go up sometime in September or possibly December. The economy right now is growing maybe around 2.25%, 2.5%. That's still modest growth.
A full percent better than Europe is forecasted to come in at.
Yes, but we still have a job market that is not fully responding to
we still don't see wages go up.
Exactly. So until that happens, I don't think there's and I think there's another important factor here. I don't think that the U.S. the Federal Reserve wants to raise interest rates until they see the full effects of the stimulus program in Europe.
Peter Cardillo, thank you so much.
My pleasure.
See you soon. Coming up, the world's finance ministers gather in Washington. Many may not be eager to go home. We'll preview the spring meeting of the International Monetary Fund. You're watching our Xchange.